Hello, everyone. Welcome back to the show. So today I'm joined by Grant Doherty, and he's a tax expert, a real estate advisor, and he helps people do their taxes, analyze their finances, etc. And he has a pretty big following online, and he pushes very useful information in the finance category specifically, but real estate and other things as well. And so I was happy to see that he was coming on, and I'm glad to have a conversation. Thanks for coming on, Grant.
Yeah, no, no. Thanks for having me, Harley. Man, this is about to be a great chat, man. I'm excited to. Anytime I get to talk about, finances and taxes, it's not a very commonly talked about subject. So anytime we get to, talk about it and educate the people, man, it's always a great time.
Yeah, I totally agree. And it's funny, a lot of people may not, whenever they hear the topic of money or finances, they might shy away or it's something that they avoid, when in reality, I feel like that's like a conversation that needs to be had. But I was going to ask you, like, what first got you interested in money, taxes, finance, etc.?
Yeah, man, that's a really good question. I actually went to school to play baseball. So that's actually like how I went, got to college. I played baseball at Prairie View A&M University, and I needed to find something that I was going to study. So I just looked something up that would make me good money whenever I got out of school, and it was business, right? So I started with finance and accounting. And ironically, that's actually where I started, initially filing tax returns. Now, it was limited tax returns. I was not doing anything complex. It was really just like, friends and family that I had there that had like small jobs, and maybe they had some like college expenses or something. Nothing too crazy. But that's essentially like where that's where it all started. Once when I graduated, I had to go and work in corporate America. And so I started off at this company called Cisco, and I worked in their finance and accounting department, and that was like an experience all in its own, right? Corporate America is its own experience. You learn a lot of skills, um, but a lot of that knowledge is very, very focused on that specific role in that company, right? It wouldn't really
Mm-hmm.
just be applicable to everyday society. And I wanted to have a skill that I still could do that with, right? And so that's essentially, I continue to keep my. It was a very small side hustle at the time. And then once when COVID hit, that's when it had the chance to really grow. That's when my online presence started to grow a little bit more. I actually took on a mentor and started to just prepare a lot more tax returns, and he taught me a lot about just like the tax system and taxes in general. In 2021, I got my license, which is a federal license. It's an enrolled agent license. It allows me to file tax returns in all 50 states, and I can represent taxpayers in all 50 states before the IRS. And I work with a lot of small business owners and real estate investors now. And I myself have a small business, and I also invest in real estate. So I have a lot of
Awesome.
experience in that realm. So it's one of those things that what you learn in school is very there's a lot that you learn in school that is not applicable to real life, but a lot of that stuff over time, you kind of it's like building blocks. It kind of like builds up, and then it doesn't really make a whole lot of sense while you're in school, but the moment you get out and you start actually having to, oh my, I have to file taxes for the first time, oh, I'm going to invest in my very first stock ever, like now all that stuff finally starts to click. And once when you got started and it was just something that I studied year in year out at school, I couldn't just let it go.
Hmm. Yeah, that's really cool. Yeah, it's interesting coming from, like, I just graduated high school only like 4 years ago, and
Okay.
I'm still in college, and it's interesting to see how very little talking about finances, like finances don't come up in the conversation or the curriculum that often. Like, what is filing taxes? Like, what is passive income, or like just
Yeah.
really anything. If you ask the average American questions about even their personal balance sheet, like, their assets or liabilities or their income in, expenses out, like, they might not even be able to answer. And so I find that to be really awesome that you're out here educating
Yeah.
people and also, well, helping people in this dimension. But I'm
Yeah, man.
curious. Yeah, go ahead.
No, I was just gonna say, man, it's not uncommon for so there are. unbelievably intelligent people out there, right? I work with all sorts of doctors, all sorts of scientists that are in like the health field, and they like know all these different things. But it's just crazy how little they know about just how little financial literacy they actually have. It really is amazing, and it will shock you the number of people that are currently in high consumer debt in our country and
Mm,
have no real plan to get out of that high consumer debt. Now, there's different types of debt. If we really start diving into financial
sure. Like,
literacy, there's different types of debt, right? You could have a rental property that you have a mortgage on. That would be a little bit more favorable type of debt. Because now you have an asset that's generating cash flow, and you have a tenant that's supposed to be paying down that mortgage. So a little bit different theory, lots of risk involved in that. That's a whole other conversation. But then you have like
yeah.
credit card debt, and credit card debt will crush you, right? And the reason
Oof.
why it will crush you is because of something called compound interest, and that is a subject that if you really want to understand financial, have financial literacy, you have to understand compound interest. There's an old saying that those who understand interest earn it, and those who don't pay it, right?
Yeah.
And you don't want to be paying it because you'll never stop paying it.
Yeah, that's true. Yeah, it kind of leads me to my question, like, what do you see like as the biggest mistake people make in regards to money? Is it spending money on a credit card, or would you say there's other bigger mistakes?
Man, easy. All right, so if I had to say what is the biggest one, it would probably be if you make $100, you cannot spend $150, right? That
Mm,
don't do that. That is as basic as that sounds. That is a very common mistake that people make, and because we have such easy access to hard money loans, payday loans, credit cards, different things like that. It really is a slippery slope. Once we start going down that slope, hey, I'm just gonna go ahead. When I get my paycheck, I'll just pay this off. But man, avoid that stuff. Number one, stay within your means. And number two, simplicity really kills, right? If you can start automating your payments, right? So as soon as I get my money, it automatically goes off and starts paying all of my bills, and you're only using cash, and you can learn to budget with what you have. Get good at what you have. If you're gonna mess up the little things, you will for sure mess up the big things. In fact, that's like a topic that I always find so amusing is you
mm,
take some of these athletes or some of these people that win the lottery, and they get access to millions of dollars worth of stuff, and they go out and they get these loans, and these loans are worth millions of dollars worth of stuff. Well, now they run out of the cash, but now they're in debt, hundreds of thousands, sometimes millions of dollars in debt. And it's like if they would have never had that money to begin with, they never would have had access to get these types of loans, and they never would have been this crippling of debt, right? So it's crazy. The amount of money you have does not mean that you are financially literate. And that's why
mm,
people literally get millions, and then next thing you know, they're millions in debt, and they'll just never get out of it in their lifetime.
sure. So yeah, like it's like what are the typical scenarios of people that you work with? I see that you work with quite a few small businesses, but do you also work with individuals who have like financially hurt themselves too, or is it mainly like businesses trying to save money on taxes? I'm curious, like what specifically,
Yeah.
or what? Yeah.
So now this is really this is a really good topic, man, because it can kind of like expose to like everything that's involved in the tax industry. So I would
Yeah.
say 95% of my work is really going to be advising and preparing tax returns for small business owners and real estate investors. Now, every now and then you do have special situations where people don't pay their taxes. They don't file tax returns. This could be anyone. This could be business. This is literally anyone. They don't file their tax returns, and then a few years go by, and the IRS sends them a letter and is like, "Oh, hey, you owe $100,000 in taxes, right?" And sometimes you don't have $100,000. In fact, you probably only have like $5,000 or $10,000 to your name, and that's including the car that you drive, and everything else, right? Your retirement plan. So you don't really have this much money, right? So in very special cases like that, I do try to work with people to get like an offer in compromise. If you're listening on the radio and you hear like, oh, get your IRS debt resolved for pennies on the dollar. Don't just be so quick to fall for that. Usually, if it's too good to be true, you have to. It probably is, but essentially that is essentially what I'm talking about. An offer in compromise is essentially that same type of ad. Only certain people qualify, but it is a program because the IRS wants to implement a fair tax policy. And if you owe $100,000, but you only have $10,000 to your name, you can try to come up with some type of compromise. And there's a lot of stipulations to that, but that's like another service that I'll provide. There's also maybe you owe $100,000, and maybe let's just say you're a little bit better off. Let's just say you owe $100,000, but you're in a high-paying job, and they know that you're going to make $200,000-$300,000 a year. You can set up an installment plan, and that's something else that I'll help people do is set up long periods of installment plans to help them pay off their IRS debt over time. But again, that's only going to be like maybe 5% of my work. I mostly work on the tax planning, the proactive side instead of the reactive side. It's much better to be proactive when it comes to tax planning than it is reactive.
Yeah, that's really well said. And yeah, let's start diving into like best tax strategies for small businesses. Like, are the typical businesses you work with, are they people that like, I'm just trying to figure out what the best question here would be. Like,
Yeah.
like what, like using depreciation or using, I don't know. Like I saw a quote that you wrote that said the two best times to pay taxes are later or never. And businesses and real estate are the best way to do that. And so I'm just curious, what would you recommend for a small business? I run some small businesses and I work with some tax guys, but I just want to hear your opinions and what you feel like are great strategies.
Yeah, man, no, that's a great question. So, no, that is a great quote. The two best times to
Yeah.
pay taxes are either later or never, right? And there are strategies that you can implement to the later is to defer, right? And then there are strategies where you can pass assets down to your heirs, your children, your grandchildren, whatever the case may be. You can get a stepped up basis, but that's a little bit more of an advanced tax strategy, right? Before you get to that level, you gotta crawl before you can walk, and you gotta walk before you can run, right? So for
Sure.
most, I would say 95% of business owners, whenever the best thing they can do to make sure that they are as efficient tax wise is to make sure they have good bookkeeping. Make sure that you know your numbers, right? The very first thing that I do whenever I start to work with people, I take them on as like a year-round client, is I want to give them an estimate. Day one, I want to give you an estimate. This is what you're looking at as a tax bill, right? Because without that, without your, and I can't give you an estimate unless you have your books done, right? And that is very, very important, is because tax planning, number one, starts with tax preparation. Like, you have to know how to prepare the taxes. You have to know what you are dealing with. What type of situation are you dealing with? Are you owing $10,000? Are you owing $20,000? Are you owing $50,000? What is our target number, right? And then from there, now we start optimizing. Okay, let's make sure that we have separate bank accounts for personal and business, so that we make sure that we capture all of our deductions, right? Let's max out our solo 401k if we have one. If we don't have a solo 401k, what other type of retirement plan do we have? There's going to be certain foundational things that we want to set up first before we start looking at advanced strategies like, okay, let's get this vehicle and deduct it, the depreciation against our income. Or let's get this rental property, or let's do a 1031 exchange. There's all sorts of different higher level strategies, but the most simple, basic levels of tax planning and efficiently running a business, simplicity kills, right? Bookkeeping is going to be number one.
Yeah.
I can't stress that enough.
Yeah, like I bet you could see some business owners who come to you and they're like, their books aren't fully in order. They are kind of speculating on how much they're really making, and they may be chaotic because maybe they're doing too many things at once, and like they haven't actually take that much time to really crunch their numbers. And
Yeah.
I'll do that in December. I don't know if you run into people like that, but like seeing like, well, the family business that I grew up in, I kind of turned into the bookkeeper. I kind of started crunching the numbers because I saw like, wow, now I can forecast like what we're going to
Boom.
have in our bank account by the end of the year. I can forecast based off the tax rate. Like, will we have enough money, to pay the government back? And like, oh, maybe we should invest in equipment. I really agree with that, where it's like the more you have a handle on your books and your numbers, the better you can, what's the right word? Be proactive, like you're saying.
Exactly. Exactly. Yeah, man. No, the the bookkeeping hands down is probably the number one and most important thing whenever it comes to just tax planning, because you can't do anything unless you have those numbers.
Sure.
And there's dead giveaways to know if people haven't done their bookkeeping. Like, so for example, if you've done books, you know that unless they're giving you estimates, like they don't want exact numbers, but like if it's tax time and I'm filing your tax return and you hand me a profit and loss statement and everything ends in a zero, it's like a perfect number. That's a dead giveaway. Like, oh man, this is not. That stuff never happens, right? You may have a few that end in a perfect zero, and like, okay, I'll give it to you, but 6,000, 4,000, 12,000. It's like, oh, okay, that was real original. Like, you
Mm.
definitely didn't know. So, but yeah, man, there's a few things that people will tell you, oh yeah, I drove about this many miles or different things
Mm.
like that. So, um,
Sure.
yeah, but guaranteed that is the number one most important thing in regards to tax planning.
Fair enough. Yeah, that's a good point. And yeah, I kind of want to ask you, when it comes to, like, let's say you're running a business and you are debating purchasing a piece of equipment, a new vehicle, etc. What is more advantageous in regards to how much you earn on this investment? Would it be to take out a loan and use debt to your advantage, or would it be to use cash? It's probably very situationally dependent, but
Yeah.
I'm curious, like, what you see happen more and what you see working out better.
Yeah, I mean that's a really good question. And so if you really want to know, probably the best person to answer a question like that, it's probably gonna be like a financial advisor. Like those are you.
Okay.
It's more of like a but I'll kind of like chime in, and give my piece of advice. But technically, if you're ever in a situation in your business where you're like, okay, should I do this or should I do that, and it's a financial impact, taxes is just one piece of the entire pie.
Sure.
Finance, making sure that you make money is the most important part, right? And then having a tax plan is the second part. So, should you take a loan or should you pay cash? The final answer should probably come from a financial advisor. But a few things that you would want to look at. If you're going to take a loan, right, that is, you don't pay income taxes on any loans, right? So loans are tax free, but you do pay interest on
Hmm.
loans, right? So now you want to start looking at, okay, what type of interest rate am I getting? What is the overall cost? Whenever you start, if you guys ever take finance classes in college, you'll learn things about present value, net present value, future
Mm-hmm.
value, right? You will want to find those values on those loans, right? To figure out exactly how much is this actually going to cost me, right? And then now you just start writing down the numbers. Now you start looking at the opportunity cost, because if you pay cash, one of the things that you will also learn if you ever get into finance is time value of money. If
Mm-hmm.
you can keep $1,000 today in your name, you can invest that and you can potentially make more money, right? Whereas if you take the 1,000 and you get rid of it, now that's 1,000 that, okay, yeah, you're not paying interest on this loan or anything like that, but now you're out of capital that could essentially still be working for you, right? There's so many different ways to look at it, right?
Mm-hmm.
How much the loan is, how much capital do you have on hand, is that capital easily replaceable? Is this a down period in your business? Like, so for example, in the tax industry, January, February, March, and April are complete booms for revenue. But then once we get
Mm.
into May, June, July, that's when revenue starts to slow down a lot, right? So a lot of different factors that you really want to look into is, how easily replaceable is the cash, all sorts of different things. But, which one is better? If you don't run across a lawyer or a tax advisor that says it depends, you need to be wary, right? Because that's the
Yeah,
that's the final answer. Is it really depends.
totally. That's a great, really well thought out answer. And I was also thinking of another factor that might influence this, like the inflation rate. Sometimes it's like, right now it's like maybe it might be worth taking out a loan. If the interest rate is lower than the inflation rate, then it might truly be worth it because now that cash that you're keeping is just, it's already devaluing as it is. I don't know. I'm just trying to think, like, because I'm trying to
Yeah,
make choices in, well, this little business I do that's online and then my family business. So yeah, it's just, it's fun
yeah.
to ask these questions. And I'm not asking, I shouldn't ask a specific, I'm just kind of asking
You're
general
good.
questions. But yeah, either
Yeah, no,
way.
you're good, man. This is all great talk, man. And inflation is a major factor, especially in regards to like time value of money, right? That's
Hmm.
essentially what time value of money essentially is that $1,000 today is worth more than $1,000 tomorrow because inflation is, tomorrow is probably not a great example. Let's just say a
Sure.
thousand dollars today is worth more than $1,000 5 years from now because inflation would have had time to eat away at that thousand. So
Yeah,
I mean, heck, look at groceries nowadays, right? Stuff is ridiculous.
totally. Yeah. And that's where I heard this interesting quote from Hormozy. You've probably heard of Alex
Oh
Hormozy
yeah,
before, for sure. And he was like, I recommend any individual starts an LLC and just starts funneling some expenses into this LLC, no matter if, even if you have an idea of what the business could be, because you're going to save some of that money and like you're just going to leverage some of that expense against your income. I'm curious what you think of this strat. Do you like that idea or not really?
So from a tax perspective, I can speak on that. Now, as far as like a financial business perspective, I don't think I'm really too informed on like what he was thinking at the time to really
Hmm.
be able to comment on that. But from a tax perspective, whenever you are funneling expenses through an LLC, there's a few things that you want to keep in mind, right?
Mm.
Is that business expenses are deductible, but hobby expenses are not deductible. And so, when does the IRS kind of come in and say, like, no, these are not business expenses, these are hobby expenses? Generally, you will want to run a profit in 3 out of 5 year in a 5 year consecutive span. You'll want to run a profit at least 3 of those years in order to essentially validate that this is a business. So yeah, you can run expenses through an LLC. If you plan for it to be an actual business, yes, you can do that, and you can claim losses on your tax return for that year. However, you do want to make sure that the end goal is still to be profitable because if the IRS were to ever come back and audit you, they would look to see, is this a business or is this a hobby? And if they do
Mm.
conclude that it's a hobby, any expenses you claimed will be tossed out, and then you owe ordinary income tax and you owe self employment tax on that income.
That's a great point. I'm glad I asked just because, I don't,
Yeah.
because I'm trying to just build this podcast business into something and coaching alongside of it. Right now, I've taken a loss 1 year in a row. This year, I'm trying to make some income back to maybe break even, or I'm just like,
Yeah.
so I should shoot for a profit at least 3 out of those 5 years on
Three
average,
out
kind
of
of thing.
five. And here's the thing. If it takes you 3 or 4 years to become profitable, you would not be the first business that ever took that long to become profitable. That is
Hmm.
just the general ideal goal. Um, Now, how hard line is the IRS on that 3 out of 5 year? I would say it depends, right?
Hmm.
That every case is different. That they can look and see if you just set up a lemonade stand and you're trying to make profit off of a lemonade, like, or is this an actual business that really does have a lot of expenses that is creating revenue? It's
Yeah.
just you have a whole lot of expenses that you have to incur to keep this business running, right? They can
Hmm.
definitely tell and look at your books and records and make that determination.
Sure. And what would you say are some hobby expenses that should never be written off?
Oh man, personal expenses, right? So one that gets argued a lot would be something like makeup. Okay, so I see this one like talked about
Interesting.
all the time on social media, right? More than likely, I would say like 99% of the time, makeup is not going to be deductible. Now, do you have actors who are about to go on set to
Hmm.
do a video shoot? They need makeup. Okay, yeah, that's a little different, right?
Yep.
But if you are, let's say, a real estate agent and you want to make the argument that I need my makeup to look really good to go and sell this house, the IRS will for sure rule against you, and they will not allow that. So
Hmm.
think of expenses like that. Anything that's just too personal in nature. So one thing I'll see a lot is people will find out that meals are deductible, and then but there's caveats to it, right? You actually have to
Hmm.
be taking out a business client or maybe an employee or something like that. That meal would then be 50% deductible if you bought both of y'all's meals and you essentially went out and discussed business, right? But now whenever it's yourself and you're just buying meals, that is not deductible, right? So
Hmm.
that would be like another example. I see people like they'll hire their spouse and then they'll try to deduct every single meal that they have with their spouse. You, you were going to have to eat regardless. Like you weren't just going to starve yourself, right? And more than likely, if it's your spouse, y'all were both going to eat. So just because you sit down and eat lunch or dinner with your spouse does not make it a business meal. Now, if you have a business client out and it's you and your spouse and it's business client, that's a little different. And especially if you're
Sure.
discussing business, like that's the key component, right? But if it's just you and your spouse, guaranteed hard line, more than likely no.
Okay, fair enough. And I hear they were a little bit more lenient the past few years due to COVID, or like they made it 100% write off or something. But
Yeah, yeah. So in the past, so that was what 2020
20
was it 2020,
and
21, and
2021.
22, or maybe it was 21 and just 22. I can't. I think
I'm
it was
not
just
sure.
2 years.
I
I
think
think
so
it was just
too.
21 and 22. They made meals 100% deductible. Now it
Hmm.
has reverted back to the 50% limit for
Yeah.
2023. So yeah, the 100% meals that was for all the restaurants. So people couldn't go out to eat because of COVID and stuff. So
Hmm.
they needed to get a stimulus in for the restaurant industry. So they allowed business meals. That was 21 and 22. I don't think it was up and going in 2020. I can't
Okay,
remember.
yeah. I see what you're saying.
Man,
Fair
there were
enough.
so many stimulus checks, so that was like one of the biggest things. So we had the advanced child tax credits and the stimulus checks.
Hmm.
Advanced child tax credits was 2021. That was not in 22, but then we had the stimulus checks in both 2020 and 2021. And
Mm.
that created absolute nightmares for you would be surprised how many
Hmm.
people got stimulus checks and just totally forgot that they actually got a stimulus check. Would not check their mail because the IRS sent out letters saying like,
Oh,
"Hey, you got this much in stimulus checks." You'd be amazed at how many people just like forgot that they got a stimulus check. And so
really?
well, yeah, all that information has to go on the tax return. And if it's not right, then boom, that affects your refund. It
Oh,
affects how much,
sure.
and so yeah, and now you're talking about you're getting a letter from the IRS, essentially paying back whatever. Oh, it was an absolute nightmare, man. It
Yeah.
was, yeah. So I'm glad they're not doing those stimulus checks anymore. It's
Yeah.
like, and they were set up as tax credits, right? So
Ah,
I'm not against the fact that they gave out stimulus checks because I get it, right? There's all sorts. People needed the money, right? But the fact they were set up as tax credits, that essentially now that I don't know, it's kind of tough. But it created an absolute administrative nightmare
I
back in
bet.
2020 and 2021.
Hmm. I'm curious, did the Paycheck Protection Plan loans also do kind of a nightmare to you as well? I'm just curious.
Yeah, I helped some businesses file and get them.
Yeah.
I didn't really have too much of as like nightmarish stories around PPP. Not too many of my
Okay.
clients actually qualified or
Sure.
yeah. So PPP wasn't really like a big thing for my particular clients. I had a
Mm.
few that I helped get it. And then also the ERC. In fact, I've actually
Mm.
stayed over. None of my clients have actually qualified for ERC, but that's actually been the really big hot thing that has caused a lot of IRS troubles is the ERC,
Which is, what is that?
Employee Retention Credit.
Okay. Yeah. Okay. Yeah.
Yeah,
Interesting.
that there have been there's a few businesses that have been caught up. They got like hundreds of thousands of dollars of credits back, and now they have to repay it all.
Hmm. Man, that's crazy.
Yeah, man. This COVID era, tax credit, ERC, all that stuff, man, has honestly been a lot of work, and it's been administratively, it's been very very tough. It's now some of those incentives have really helped business owners. So like, I'm not trying to take away from that at all, but
Hmm.
from an administrative like tax reporting side, I mean, as it is, it's difficult enough to get people to take pictures of their receipts and save them. And now you just add on a whole nother layer. Yeah, man, it was tough. It was tough, but
Yeah.
it was good for business though.
Sure. Yeah, like what's your opinion? Well, not opinion, but you just mentioned receipts, and I'm curious about this, where it's like, what's the difference between having a receipt and then going to your bank statement and showing that you spent X amount at,
Oh yeah,
Walmart or something? Or, well, I guess Walmart, it doesn't break down what you spent at Walmart, but like, is that kind of the point there? Like, you want to be
yeah.
able to break it down even deeper?
Yeah, so if you go on a bank statement, it'll just give you, so if you went to Walmart, it'll just show $50 transaction, but on the
Yeah.
receipt, it'll show you $30 for pencils, $20 for gum, right? And so like
Yeah.
maybe the gum isn't deductible, but the pencils are.
Yeah. Okay. I see. Yeah, I should definitely do that. Sometimes, like, I think I do a lot of online orders, so there's like a lot online receipts, but like, you're right. I don't always like save them all. I could look back in my email, but like, I should definitely be a little bit more rigorous on my receipt saving. I'm just thinking for my family
Yeah.
business right now. I'm like, huh.
It's one of those things where you want to prepare for the worst
Mm,
and just hope that it just never happens, right? You
yeah.
know, so it's always better to stay ready than to get ready because getting ready is so much more difficult. Like going back and trying to find those receipts. I mean, it sounds good in theory that you think that you're going to go back into your email, but it doesn't. It rarely ever works like that. If you just take the extra minute to just save it into a drive or like
Yeah.
somewhere on the cloud, it'll be a lifesaver in the event that you're ever audited.
Yeah, that's great. Hmm. And I'm also curious in regards to like family businesses, the idea of like you're able to hire your children or like give them a money that can be rolled into a Roth IRA or like some kind of like tax advantage way to pay children of family businesses. I'm curious like if you want to explain that. I think you might have said something about that.
So yeah, man, that's like one of the biggest perks, right? Is
Mm,
being able to build a business that one day your kids can essentially work in, and eventually they can run it, right? They can run the business
yeah.
themselves. Now, whenever they're a little bit younger, and there's a lot of theories on this. Depending on what your business is and like what you actually have them doing, you generally want to wait until they're a little bit older of age to actually complete legit work.
Sure.
How old is that? I mean, it really all depends. 12, 13 is usually like, that's when kids can go out to, so whenever
They
I
can
was like
start
12 or
sweeping or
13,
yeah.
yeah, man. So one of the things I didn't have a family business. I would start mowing lawns though,
Oh
right?
yeah.
You're a little bit older, you can get out in the sun, you can push the lawnmower, you can make a little bit of money. So
Mhm.
now if you have a business, they can do administrative tasks like so maybe janitorial work or maybe just organize paperwork, organize documents, clean the desk, something very, very simple and basic. Now here's the
Yeah.
thing. Pay them what you would pay anyone else, right? If you want to
Mhm.
set yourself up to look, relatively silly in an audit, let them know that you're paying your children $100 an hour to do janitorial work, right? That just it just would never go over, right? So pay them a reasonable wage.
Mhm.
Make sure you document everything. Documentation is so important in the event of an audit because, man, you'd be surprised how even in an audit, depending on who you have, if you have like a business where it is very obvious that you use your vehicle for work, but you don't have the vehicle documentation to validate what you're putting, they will throw that out. They will throw that out in a
Mm.
heartbeat. So man, especially whenever you're hiring your kids, have time logs of when they were working and what they were doing. Have an actual job description detailing out what their job roles are, how much they will be paid per hour, or whatever the case may be. And make sure you abide by child labor laws. That's also very, very
Mm.
important. But essentially, I went through all that to essentially say that yes, you can pay your children a reasonable wage, and as long as they fall below the standard deduction, they won't owe any federal income taxes on that income. Now, depending on what state you're
Interesting.
in, you may owe state taxes. So that's one thing
Mhm.
to keep in mind. But for federals, if they're below the standard deduction, for single filers, they won't owe any federal taxes. And also, the biggest key is that once when you have earned income, you can now make contributions to a Roth IRA. And the earlier you can fund a Roth IRA, the better because Roth IRAs are essentially a tax deferred or the tax-free investment vehicle. Essentially, you put money into the Roth IRA, you don't get a tax deduction whatsoever, but that money grows tax-free, and then in retirement you can actually take that money out tax-free. And so
Mm-hmm.
you want to talk about compound interest. If you can have compound interest work for you over, you know, 20, 30, 40, 50 years, that is really how you build wealth. And in theory, one of the best things about a Roth IRA, in my opinion, is that if you ever build yourself a business and you can live off of a different source of income and you don't even need this Roth IRA, you can actually pass that Roth IRA down to your heirs and they can receive the same tax benefits that you would have received, should you have, used the money. So that right there is a great way to essentially start to build a tax-free bucket of generational wealth and pass
Yeah.
it down. Man, there's all sorts of different investments for children, right? 529 investing, like
Oh yeah.
starting next year in 2024, you can start to roll money over from a 529 over to a Roth IRA for the beneficiary. Yeah,
Oh,
man.
that's
So
so cool,
there's
man.
several caveats to it. So I always work with a financial advisor. But
Sure.
yeah, man, there's all sorts of tools out there for building tax-free wealth for your children.
So then it's like, you're investing so that they go to college, but then 20 years down the road, you realize, maybe they aren't going to college, or they're going to take a slightly different path. And it's like, then it's not just completely kind of wasted in some sense.
Right, right. Yeah, I mean,
Hmm.
and there's a few limitations, right? So, of course, the earned income limitation, they still have to have earned income.
Mm.
There's a max rollover of $35,000 in a lifetime, right? So that's the max that
Okay.
you can roll over. The account has to be the account must have been open for at least 15 years, and
Okay.
you can't roll over any money that you've put in there in the last 5 years, right? So that's like a few of the different stipulations that you have to follow. But essentially, yeah, man, you have a kid, you know. Like for example, I just had my third kid back on August, right? As soon as we get
Congrats.
all this information in, we're gonna open him up a 529 account. Already done it for the first two. We're gonna start making contributions and just start investing for him now,
Yeah.
and hopefully we'll either use that money for college or we'll roll it over for them into a Roth IRA.
Perfect. Yeah, that's really cool. And yeah, I'm curious if you don't mind explaining like the difference between like working tax versus tax that comes from businesses, real estate,
Oh,
passive
okay.
assets. Yeah, like talk about how like when you work, 30% of it kind of gets taken by the government, whereas if you choose to work for yourself or buy real estate, it can be a little bit less.
Yeah, man. So this is actually a really good topic to talk about, man.
Hmm.
So um, one of the things you'll hear is people love to get passive income. And the reason why passive income is so much more favorable than earned income or active income is passive income is actually taxed far less than your earned income. And the reason being, the main reason why this is true is because of Social Security and Medicare tax. It is
Hmm.
nicknamed the working man or working woman's tax, right? So essentially what it is that whenever you go out and you earn income, you work for a wage, W-2, a business, whatever the case may be, if you have earned income, you pay federal income tax, state income tax if you live in a state with state income taxes, and then you pay this working man or working woman's tax, which is 15.3%. Now, that 15.3% is divvied up. Half is owed by the employer, half is owed by the employee. So if you
Hmm.
if you are a W-2 employee, you only pay 7.65%, but if you're self-employed, you pay the full 15.3%. That's something that's not actually talked about very often is that
That's
you
interesting.
know, yeah, technically the self-employed do essentially have to foot more Social Security and Medicare taxes than people who maybe go and get a W-2 job or something like that.
Yeah.
But now you start looking at passive income. So what the in tax code in tax language, passive income really only refers to like rental income or maybe a business in which you do not materially participate and you receive income from. But other forms of, I guess, passive income in in the tax code they may refer to it as like portfolio income or interest income. So slightly different, but it's same theory, right? Dividends, interest. So if you have money in a high yield savings account and you're getting paid interest, that is also not subject to Social Security and Medicare tax. If you invest in dividend paying stocks and they pay you dividends, those dividends are not subject to Social Security and Medicare tax. The rental income that you receive, if you own a rental property and they pay you rent, that rent is not subject to Social Security and Medicare tax, right? So I always like to tell people you could take someone that makes $100,000 of rental income, and then 100,000. You could take someone else who makes $100,000 of either W-2 or business income. The real estate investor will always pay less in taxes because they're not paying those Social Security and Medicare taxes.
That's really awesome. And it kind of leads me into the question of like, how'd you get started in real estate, and what do you recommend for someone young like me, and how to start in real estate?
Yeah, man. So, man, that's a really good question. So, I'll be honest. I actually first got my feet wet in real estate just trying to diversify my portfolio. So I have a few different investments in like stocks, bonds, retirement accounts. I found a syndication and just invested my money just because I wanted to diversify. I didn't really do it because of the tax implications. In fact, it's
Sure.
all considered passive income. I'm not really offsetting any of my income with W-2. I mean, with depreciation or anything like that. And then the reason being is most of my money that I use to invest actually gets invested back into my own business right now,
Sure.
because that is actually what makes me the most money. Return on investment, ROI. If you ever
Yeah.
get into finances, that is a key term that you should become very familiar with. Return on investment. Essentially, if I put $1 into my business, I am more likely to turn that dollar into $20 than if I were to take that dollar and put it into real estate, where I may get five, or if I put it into
Sure.
stocks and get $5 or $6 or whatever the case. So, um, essentially, right now, if I could go back, I would actually take all that money, invest it back into my business, into like different processes or something like that. But I do have investments in a syndication in real estate, and I also have other investments in like different stocks and bonds and things like that. High yield savings account, if you want to call that an investment.
What's a syndication?
Syndication is like a partnership. So a
Mm.
syndication is just like a fancy way of saying, there's multiple people pulling their money into a business, and you all go in and like buy a building or something like that.
Got it. Okay. And you got that syndication is for a building, like an apartment
Yeah.
or a.
Yeah. It's for commercial real estate.
Okay, got it. That's interesting. Hmm. And yeah, like I sometimes hear people, it's so hard to always know what to do when it comes to where to put your money. And you bring up ROI, and it's like some people say, why would you go into real estate when you could create a business online or create a software that like 20x's, or like real estate won't do that for you that quickly. Or it's always hard to know where to put your money, where to put your time. And yeah, I guess the question is like, how do you, well, where do you draw the line between like what you're passionate about and what brings in the most ROI? Like it's
Yeah.
a kind of a life question, I guess.
Yeah, man. It depends. That's one of those things where you have to eventually make that decision of like, okay, um, because even in business, there is only so much you can essentially grow in a given time period, right? So if you just come up on a ton of cash, and you need to diversify, you're looking to deploy it, but you don't need to deploy it all on your main gig. Diversification, that's one of the most important things that an investor can learn to do is to diversify their money. And so if you get into real estate, that is great, but don't forget to, you can invest your money into other businesses, right? It doesn't
Mm,
even have to be a business that you yourself are running, right? You could find
yeah.
someone who owns a washateria. Man, washaterias are like one of the most profitable businesses out there. So
Like
are
a,
self storage units.
hmm.
There's some really profitable businesses out there, but yeah, washaterias,
Is that like a
car.
car wash? Okay, car wash, and then washateria is like clothes washing, like laundromat kind of thing is what
Yeah,
you're saying? Okay, okay.
yeah, simple businesses, man.
Yeah.
Even gas stations. Gas stations are supposed to be, relatively
Hmm.
profitable, right? And then they're all real estate focused. Man, whenever you start really like looking into it, there's different levels of real estate investing. Even like there's single family home investing,
Mm-hmm.
there's multi-family home investing, there's commercial real estate investing. Then you can get into things like mobile home parks. Then you have different aspects of like cost segregation analysis. Like, so okay, if I have a property by the water, I'll probably have a higher land value to building value. So my cost segregation won't go as far on a beach property that is oceanfront versus maybe a property in the Smoky Mountains where land value is a lot smaller and the building may be a lot higher. Right? So there's all sorts
Sure.
of different ways that you can start slicing up real estate investing, and that's just real estate investing, right?
Mm.
Don't even get the financial advisors going on like stock investing and
Yeah.
bonds and oh man, that stuff gets really really detailed.
Hmm. Yeah, that's interesting. Yeah, that's it. I like that. And I'm curious, like, what's your perspective on bonds at the current moment? Like, I've heard of I bonds before. I've heard of investing in
Yeah,
bonds, but with the yeah, go ahead.
man, I'm not a financial advisor, so
Sure.
take my advice with a grain of salt. I think
Yeah.
bonds have a spot in everyone's portfolio just for diversification purposes, right? Now, the younger you are, generally the smaller allocation of bonds you can have in your portfolio. And then the older you get, you'll probably want to start stabilizing out everything. And so you'll want to have some fixed income in there with bonds and stuff. But I think they're a tool that is like anything else, right? They're great for diversification. I would not say that you will hit a home run with bonds, right? But they have their place in every investment. Heck, life insurance, right? There's so
Mm.
many people that really hate on life insurance, but if you have a family, oh man, you for sure need life insurance, right? And then there are different types of life insurance where you can build like a cash value policy or something like that. So I'm not an insurance salesman. I'm not going to just say go and do it, right? Always talk with your financial advisor, but once when you get to that point where you can start to really diversify your money, there's so many different options out there, right? There's stocks, bonds, real estate, different life insurance, gold, right? You could
Oh
start
yeah,
to
I was
look at
gonna talk
hard
about that.
metals. Man, look, there's people that have Pokemon cards that are worth thousands of dollars, man. Like, there's all sorts of different things. Again, consult with the financial advisor. Just because someone bought a Pokemon card and they sold it, made an incredible ROI, doesn't mean that you will, right? So,
Hmm.
there's proven and tried methods out there. There's collectors that get coins and all sorts of different things out there, man. So there's all sorts of different ways to deploy your money.
Sure. Yeah, that's interesting. And I'm curious, just from your perspective as a tax, advisor, how often do tax policies change? Like, how often are you having to be like checking up on the news, the latest break-in change in policy? How often does that happen?
So there's tweaks and changes and maybe like new laws. It seems like pretty much every year they have
Mm.
something that gets thrown out there. But the last major overhaul was 2017, going into 2018 with the Tax Cuts and Jobs Act. Um, Now, before that, I was not, I was still in college, like before, so let's see, I graduated college, undergrad in 2015, and then I left grad school in 2017. So as
Okay.
these Tax Cuts and Jobs Acts was essentially being overhauled, that's whenever I started to really like start to pay attention to the different tax codes. So that's the last that I can really remember it. But ever since then, there has seemingly been something going on every single year. Wasn't made. Some of it may have been big, but it wasn't major overhauls like the Tax Cuts and Jobs Act, which is actually sunsetting at the end of 2025. So the original the original tax code tax laws that we had prior to 2017, we're reverting back to that after 2025 in 2026.
What are the implications of that?
Oh man,
It's probably
higher
complicated.
tax rates is kind of so the different marginal tax brackets are going up a little bit.
Hmm.
The standard deduction is getting cut in half, so more people will be itemizing. There's a deduction. It's the qualified business income deduction. That's for business owners. That's actually going away. And there's a few things. They're starting to phase out bonus depreciation, so that actually is set to, I think, could be completely gone at the end of 2026. Um, there's a lot of changes coming back to like the itemized deductions. So currently there's a limit on the number on it's called state and local taxes. SALT is what is
Mm.
essentially like the nickname for it. There's a $10,000 cap on that. That is going away. So more people who live in states with high income taxes, they'll get a larger deduction there.
Hmm.
But it's just crazy, man, because all these states that essentially had these salt caps that were impacting their citizens, they started implementing these pass-through entity tax credits,
Oh yeah.
which was like their workaround for that. But it's going to be interesting to see what kind of happens now that we're like reverting back and they can actually deduct it. So do they
Mm.
still, I don't know, man, that's a state level thing. That's not really a federal. So,
Sure.
there's
Interesting.
also, yeah, man, it's going to be an interesting time. I think a lot of people will be caught off guard by the increase in tax rates at the end of 2025.
Fair enough. I'll be looking out for it. Yeah. And what was I gonna ask? I'm trying to think. Well, let's see. Man, it's on the tip of my tongue. Something to do with.
Oh, yeah, you're good, man.
Well, I guess the next question could be. Let's see here. Well, what are your favorite books in regards to finances, financial literacy?
Oh, man, that's a really good one. So my journey in personal finance is a little bit further along than some other people, right? So, um, a book that really changed my perspective on investing was The Intelligent Investor, but it is a little bit more of an advanced book, so I wouldn't recommend someone who's brand new to finances jump into a book like Intelligent Investor. It's a little bit some of the vernacular and some of the grammar is a little bit more advanced, but a great starting book I think is Rich Dad Poor Dad. That
Oh
is
yeah.
yeah, man. That for a very first finance book you ever want to get involved in, Rich Dad Poor Dad is great, right? And I think that almost any of Robert Kiyosaki's stuff is going to be pretty good. So is Dave Ramsey. Dave
Mm-hmm.
Ramsey has some really good books out there for like foundational personal finance. Now both of those guys have flawed views when it comes to like investing and like some of their other but whenever it comes to like budgeting and just foundational financial literacy, I think they are both great authors for getting that foundation. Once when you like want to start investing your money and deploying into different investments, that's when I think Intelligent Investor, A Walk Down Wall Street, um, what is it's a book by Tom Wheelwright, and it's Tax Free Wealth. Tax Free
Mm.
Wealth is a really good one. That's more of like a tax book, and then you know if you really start getting into like real estate investing, tax strategies for real estate investors is also a really good one.
Hmm. Interesting. And just a quick little conversation about stocks. Like, what do you recommend? Stocks, ETFs, mutual funds, a big diversification of many?
Yeah, man. Again, it depends. It depends on your appetite. Generally, and again, I'm not a financial advisor, so take this advice with a grain of salt. Always do your due diligence.
Mm-hmm.
The whole disclosure thing.
Mm-hmm.
But I'm a firm believer in index funds. I know about stock analysis. I kind of, I get the general overall idea of, investing in stocks. You want to, choose a good business. But I take away, man, look, here's one thing. Have you started investing yet? Like, do you invest money? Yeah, man. So I'm not too sure how long you've been investing, but I've been investing since early 2015, whenever I was first able to really start getting money deployed. And since 2015, there have been several dips in the market, and that stuff is stomach wrenching, right?
Yeah.
And so that's one of those things, man, is that it's one thing to say like, hey, go and invest and do this. It's another thing to experience it, right? You
Mm-hmm.
need to experience what it's like to actually invest and get you need to figure out what your appetite is for risk, right?
Yeah.
Because you have no idea what pain is until you watch your investment. And everyone's idea of a lot of money changes, right? So if you have a
For
thousand
sure.
dollars and think it's a lot, it's going to hurt you to watch that thousand drop to 500. Imagine if you have even more, 10,000, 100,000, 200,000, a million, and that drops down by $500,000. That stuff is literally gut wrenching. You need to practice this stuff, man. And
For
so
sure.
I am not, my risk appetite is not there for individual stock investing, because you could literally watch a stock, an individual company, they go bankrupt all the time, right? So you could
Yeah,
literally
they
watch
do.
your money go to zero and not get any of it back. I don't have that type of stomach. That's why I invest in index funds. Now, just because I invest in index funds, I usually go for like the general S&P 500, just track the market, I'll be good. But the market itself goes through wild swings all in its own, right? And you know, that's really just like my best piece of advice is find something that you have a good appetite for and get experience as to what it's like to actually invest. Read different psychology books on investing, because you know, I'm trying to tell you, it's one thing to sit there and say, "Oh, we're going to hold for the long term." It's totally different. And see, here's the thing: like these drops, like they happen in all different types of ways, right? So let's just say you have $100,000. Could you sit there and watch your $100,000 decrease down to $40,000 overnight, or maybe over a span of a week? Like, and we're talking about wild swings that, like, this happens in a few days. It happens so fast you don't even have time to react. There's also the ones that trickle down over an entire year. So now it's been a year and everything is still going down. And it's like, bro, is this stuff ever going to go back up? I'm getting out. The world is ending. I'm taking my money out, right? So it's one of those things you really just have to experience it and get that appetite for investing, because it hits everyone different, trust me. And that stuff is really gut wrenching to watch happen if you're not prepared. I've been doing this stuff now, what I mean, we're going on 8, almost 9 years, so like I've got a general idea. I did not experience the Great Recession. I heard that was awful. In fact, I hear horror stories from people
Mm.
to this day. I mean, I don't know how much research you've done into it, man, but
Ooh.
man, people really thought that the U.S. financial system was collapsing. Like, they thought that the world was literally about to end.
In
The U.S. is about to get
2008.
2008, yeah,
Hmm.
2007, 2008, going into 2009 was the financial crisis, and man, it was nuts, man. I was in high school, so I could like kind of get an idea of what was going on. I didn't really fully know until later. I started doing research, and I started actually working with clients that had lived through it, and they just described like their business, everything that's going on, man. Wild times.
For sure. Yeah, that's really interesting. Man, yeah, like I've had some experience investing. I've been dumb and tried options. I've lost some money doing that. I've done the dumb penny stocks. I've
Same
actually
here.
won penny stocks too. Like I've tried out all kinds of things, but I think I agree with you on the whole risk assessment in regards to like I'd rather just buy an index fund and just make money and get ROI in other ways. Not worry about looking at the screen and feeling sick if my trade drops. It's just yeah.
It's the worst. It's the worst.
Hmm.
You lose sleep. You will literally
Yeah.
lose sleep over that stuff. I kid you not, man. Like, anyone who's watching this, who's about to start, look, some people do become multimillionaires overnight. That is, you have as much chance of doing that as you do of winning the lottery, which basically means it ain't gonna happen, right?
Hmm.
You might as well just take a step back. Average returns, a really good, if you can make 7% or 8% on your investments annually, year after year, you are doing amazing, right? I
Hmm.
would I would not try to shoot anything over that. Of course, you always want to do the best you can, but be realistic with yourself. Um, don't fall for the clickbait, 100 times X your money. That stuff does not happen. I can tell you right now, I've tried it. I know what you're talking about, man. I've tried it. That stuff doesn't work.
Hmm. For sure. Yeah. I first got into the stock game like 3, 4 years ago, kind of when the internet, like there's so many YouTubers like the meme stocks, Tesla, GameStop. I didn't really get into those, but like I was seeing how the internet could impact the stock market in such a huge way, and I was like, wow, this is crazy. But I definitely fell for some clickbaity YouTube titles: buy this stock, buy that stock, and I'm like,
I
it
did
wasn't
too.
worth it.
I did too, man. It's all good. It's part of the learning
Oh,
experience.
for sure.
You don't become a good investor until you make mistakes, right?
Hmm.
I have literally lost tons of money in investing. I've made a ton of money investing as well, right? Because with time, time is your biggest asset, right? Yeah, you'll make mistakes. You can recover from those mistakes. And as long as you come back and you figure out what your fundamental investing principles are and you stick to that over time, you can definitely do some real damage. But yeah, I mean, man, look, I invested in some Bitcoin. I invested in,
Uh-huh.
some of these other like crazy things. It, it's amazing how us as a human race, how very confident we are in ourselves in like gambling situations, right?
Oh,
I don't know
sure.
why. You can know that the odds are. You could know the odds of winning the lottery are 1 in 10 billion, and you will still think that your lottery ticket is the winning
It's
ticket.
me.
It's just how we are.
Hmm. Yeah, it's true. Yeah, but it's like the long game, and time is your friend. And yeah, I totally agree with the safe bet. Like, sure, the calculated, probably the intelligent investor will teach me some things. That's on new. That's going to be on my book list soon.
Oh yeah.
But yeah, but I guess a final like question slash words of advice to anyone listening. It's like, what would you say to someone who doesn't feel as if they're financially literate, they haven't invested, they don't own a business, they don't know what they're doing? What would you say the biggest piece of advice is? I know you kind of said like, don't spend more than you earn. Do you have any kind of other words that you would recommend?
Oh yeah. Don't get overwhelmed, right?
Mm.
We all had to start from somewhere, and you're no different than anyone else. You have to take it one step at a time. Um, Take the time to learn, right? Find some good books. Rich Dad Poor Dad is a great beginner's book. There's also The Millionaire Next Door.
Mm.
Great book, right? The Richest Man in Babylon. There's a few really, really good books that you could start off for beginners. Just read that, get the fundamentals down, and just take it one step at a time, right? Rome was not built in a night, but and I hate to say this, Hiroshima was destroyed in a day. So it
Mm.
takes time to build something really good, but if you are not careful and you do not take good quality care of your finances, that stuff can literally be destroyed in a day.
Man, yeah, it's really well said.
Yeah, yeah. Not to be funny or anything, right? But it's very, very true when it comes to your finances. And you know, I've seen it happen, man. Like, some business owners really do go bankrupt. They get way over leveraged, and then they have to file for bankruptcy because then their business is not profitable and they owe $400,000 or whatever the case may be. So that stuff happens, man. It
Hmm.
definitely happens, and you can kind of trace it back to some very silly habits that just were very, very bad habits, financial habits that just ruin the business. Whatever it may be. Taking too much money out for personal reasons and not keeping enough money invested in the business to pay for things like payroll. Like if you have employees,
Uh-huh.
man, the game of business ends when you run out of money. And if you have employees, you need to make sure you take care of them, right? Now, I don't want to get too far off into it, man, but let's just say I've seen some disastrous situations before.
Yeah, and that's why you got to go to someone like Grant, and he'll
Yeah.
help you through. But yeah, but man, I really appreciate you coming on. I got 2.5 pages of notes completed.
Oh
I'm
yeah.
gonna be looking back into this, and you seem very smart in this dimension, and I love these kind of conversations because every single person I talk to about this gives me more tips, more strategies, just more wisdom, and so yeah, I really appreciate what you
Yeah,
shared
man,
today.
it was a pleasure. Like I said, I always enjoyed doing stuff like this. So maybe again in the future, if you want to do like
Yeah,
a little podcast, maybe we could like zone in on something a little bit more specific, like real estate investing or
sure.
bonus appreciation, whatever the case may be. I would
Yeah,
love to hop back on.
I would love that. Yeah, we'll get that going. Sweet, man. Thanks a lot.
Yeah, man, take it easy.